Let AI take care of the job of earning money.
Hi everyone, let's talk about how to set stop loss and take profit points. Before we begin, let's respond to the opinions of many so-called experts who advocate for trading without stop losses. A significant portion of the current copy trading strategies in the market does not set stop losses at all. Even if stop losses are set, they are often at extreme levels that are almost impossible to hit. Copy trading platforms use such an approach purely for commercial purposes. A high win rate means the strategy will look very appealing. If you've watched videos exposing how copy trading platforms manipulate their data, you'll know that many of them don't account for unrealized losses in their reports. Huge floating losses caused by either the absence of stop losses or stop losses set at extreme levels will never show up in their results. This gives you the illusion that you found an expert trader to follow, earning you consistent profits with ease. But as the saying goes, the higher the apparent profits, the deeper the eventual losses. The outcome of such no stop loss strategies often results in either liquidation or massive losses. Many platforms claim that Warren Buffett said he never set stop losses. However, they leave out the rest of his statement: stop losses are only needed for short-term investments. Buffett doesn't use stop losses because his strategy is focused on long-term investments and holdings. Now think about it, is your cryptocurrency contract trading or forex margin trading considered long-term or short-term? Even if you're trading Bitcoin spot, will you really hold it for many years? If you don't plan to use leverage and only want to trade spot, I strongly recommend that the stock or forex market is a much better choice than cryptocurrency or margin trading. If you also agree that setting reasonable stop losses is necessary, let's continue. The simplest way to set a stop loss is by using previous highs or lows. These levels, often referred to as resistance or support levels, assume that prices should theoretically move within a range and not break through previous highs or lows. For a long position, you can set the stop loss at the previous low. However, the biggest challenge lies in defining how far back to look. Is it the lowest point in the last 10 candlesticks or the last 100? There's no standard answer. If you're manually trading, you'll most likely rely on visual observation of the chart, picking a point that feels right at the moment as your stop loss level. For AI-driven automated trading, such subjective judgment becomes difficult to define. A better approach would be to analyze historical data and determine how frequently recent lows occur within a specific number of candlesticks. However, as markets are inherently unpredictable, exceptions will always occur. For instance, suppose historical data shows that recent lows usually happen within 100 candlesticks. After you define your stop loss based on this, the next lowest point might unexpectedly occur beyond 100 candlesticks. This makes previous highs or lows less suitable for automated trading. However, it doesn't mean they have no value. The main issue is the difficulty of defining a fixed number for such levels. For AI trading, every detail must be clearly defined in advance. Another common way to set a stop loss is by using fixed percentages or absolute numbers. For example, after accounting for leverage, exit the trade if the price moves 0.5% against your position. In forex trading, set a stop loss at a fixed level, such as 500 pips. This absolute number can be determined in two ways: based on historical data. Use backtesting to test various stop-loss levels to see which results in the highest win rate or profitability. For example, if your risk-to-reward ratio is 1:1, aim for a win rate of at least 60%. For a long trade, backtest different levels, such as price drops of 0.3%, 0.32%, 0.35%, and so on, with a corresponding take-profit set at an equal upward percentage. Based on your risk tolerance, for instance, with 20x leverage, a 0.3% price movement equals roughly a 6% loss, which might be acceptable for some traders. Another popular method for setting stop losses is the ATR, Average True Range, indicator. ATR reflects the average price volatility over a given period. The typical approach is to set the stop loss at 1.5x or 2x ATR. For example, if your entry price is 100 and the ATR is 5, setting the stop loss at 1.5x ATR means placing it at 92.5. ATR is a robust indicator that reflects true price volatility, making it more suitable for high-volume assets. However, it is less effective in low-liquidity niche markets such as small-cap cryptocurrencies. Now that we've discussed stop-loss strategies, let's move on to take-profit strategies. Take-profit points often come with overly complex advice online. To simplify, you only need one rule: decide on your risk-to-reward ratio. For example, if your take-profit level earns 150 while your stop-loss loses 100, your risk-to-reward ratio is 1.5 to 1. As long as your win rate is consistently above 50%, this strategy can generate excellent cash flow. In real trading, win rate alone is not important. What truly matters is the combination of your win rate and risk-to-reward ratio. For instance, with a 2-to-1 ratio, even a win rate as low as 35% to 40% can still yield profits. Strategies without stop losses often have a risk-to-reward ratio of 1:10 or worse. Even with a win rate of 80% to 90%, one loss can erase all prior profits. Another valuable approach is trailing stop loss and take profit. For example, when your take profit level is hit, instead of exiting the trade entirely, sell half of your position and move the stop loss for the remaining half to the initial take profit level. This ensures that even if the price reverses, your remaining position exits at the original take profit level, securing gains. If the price continues in your favor, you'll capture additional profits. Trailing stops are easy to implement manually and can also be programmed into AI trading systems with some coding knowledge. That's it for our discussion on setting stop loss and take profit points. If you found this video helpful, please like, subscribe, and share it with your friends.